Hey guys, welcome to the weekly market wrap-up. This is what mattered to us this week. Wall Street posted gains for the third straight day on Thursday. Officials from the Federal Reserve helped calm investor fears that quantitative easing would not be pulled back in the immediate time frame. These comments helped the Dow Jones to another 100-point day, with the index closing above the 15,000-point threshold. The S&P 500 index is now firmly above the 1,600-point mark. Last week's depressing nature was directly correlated with the statements by Ben Bernanke, which landed him in our loser spot. However, William Dudley, president of the Fed of New York, stepped up to the plate this week to give perhaps the most calming words when he stated that QE could prove to become more aggressive than Mr. Bernanke anticipates if economic conditions do not improve. Further, he stated that the bond buyback program would not depend upon calendar dates, but on economic outlook, a variable element that remains in flux. Moving over to currencies. Huge fluctuations in the currency markets, with the US dollar index flirting with the 83 level. The US dollar-Japanese yen pair moving solidly higher to 98.3 is adding tension to an already uncertain environment. This move was telegraphed by the enormous volatility in the Shibor, which is the basis for China's short-term interest rates amongst its individual banks. Last week, the one-month rate spiked by over 80 basis points, which is indicative of liquidity stress. To combat this, the People's Bank of China injected liquidity, resulting in the aforementioned drop in valuation of the yuan. However, further problems in China's economic machinery suggest that more monetary loosening may be required. This speculation may already be priced in by the people of the street, where Chinese citizens have been purchasing a record amount of gold bullion in anticipation of inflationary pressures. Moving over to winners and losers. Our winner for the week is Ceres Incorporated, an agricultural biotechnology company that develops and sells energy crops to produce renewable biomass feedstocks in North America. It spiked up over 18% against the prior session, which helped calm what has otherwise been a volatile month for the company. Over to the loser for the week is Peregrine Pharmaceuticals, a biopharmaceutical company focused on cancer research and treatment. It lost 23% of valuation against the prior session after trading in a relatively stable range for much of this year. The drop in share prices came as a result of the company failing to meaningfully extend the lives of lung cancer patients during clinical trials for one of their medications. And last but not least, over to precious metals. According to CNBC, both gold and silver are on pace to record their worst quarterly performance since records existed. For gold, bearish traders managed to push the closing price down to $1,200 for a 1.94% loss against the prior session. For this week alone, the yellow metal has given up over 6% of spot price valuation. For silver, the losses were breathtaking, with short-side traders bringing the closing price down to $18.40. The week-to-date loss for silver is 8%, which is of course bearish, but some caution needs to be urged for those still shorting the white metal. Overdoing a sure bet trade can often lead to a sharp reversal, and with both metals clearly into oversold territory, some volatility relief should be expected. Finally, palladium also observed some heavy hits during the commodity sell-off this week, with the industrial metal closing a tick below $645. While the immediate outlook has obviously turned negative, the current spot price is within 10% of its 200-day moving average, so not too bad. And that wraps it up. Thank you so much for tuning in for another weekly market wrap-up. To make sure you don't miss any future updates, click that subscribe button and make sure to email me at info@viralnetworknews.com to tell me what you love and you hate. For VNN, I'm Hannah Bernard.